Why I'm buying this asset over silver right now. So about 2 months ago, I did this video. Is gold and silver the best investment right now? I just asked that question. And in it, I explain Brent Johnson's dollar milkshake theory. And about 6 months ago, I did this video warning the everything bubble is over, where I shared a clip from a podcast that had George Noble on it. And in the video at the end, I actually gave my 8 tips on how to prepare. So if you haven't watched any of these videos that I've just mentioned, I'll put a link in the description below. And there's a couple of tips that I left out of that, but if you read in the comments section, a good buddy Martin shared another couple of tips on there which I absolutely agree with. Another video that I did 6 months ago, own gold, silver or cash, we asked that question as well. And well, let's just cut to a clip from this video with Luke Groman.
From Tumish, I hold commodity stocks, gold miners, gold royalty, uranium, Canadian oil producers, etc. I also have gold and silver. Should I try to lower my risk or not? I guess what I want to know is if markets implode, am I overexposed holding a lot of stock? I think it depends on your time horizon. If you're under 2 years, under 12 months in terms of your time horizon, yeah, I think there's real risk. If you have a longer term time horizon, 2 to 5 years, then no, I don't think there's a lot of risk in that position based on the sovereign debt being in a position that, again, there can be no problems anywhere ever again. We have a problem, and from there it's about risk management, and between here and there, again, deflation, and then how long till the end game with yield curve control. So I mean, I keep coming back to no country with a fiat currency that I'm aware of has ever defaulted on its sovereign debt for lack of printing money. So again, I think it's all about that risk management. And I think right now, quite frankly, we're in a period of time where you need to be aware of your risk management. I don't think you want to be too far over your skis holding commodities, gold, etc. We've been writing a lot about that in terms of max defensive position, talking about raising cash for months now to be in a better position, give yourself optionality, hedge volatility.
Now, you'll probably think that I'm buying cash as an asset over silver right now. Well, not quite. But before I come to that, I just want to cut to a clip from an interview about a month or so ago with Rick Rule. And yeah, check this out.
All right. Fantastic. Let's break that down. And I want to bring up that one of our most popular conversations ever is when Rick Rule signaled that cash would be vital in the days of dramatic reckoning. Look at the strength of the, yeah.
Last year, you'll recall in several interviews that we had, Daniela, that I said that while cash imposes immediate pain, in the sense that the deposit interest rates that you get paid guarantee you a loss after inflation, you have to have cash anyway. Because in a period of declining liquidity, particularly if we have a replay of 2008, the cash will give you the tools and perhaps the courage to take advantage of a situation rather than being taken advantage of. It is true that you are, after inflation, losing 4 or 5% of your purchasing power holding cash. But I have 2 observations. That negative interest rate that you suffer is really an option premium to allow you the liquidity to take advantage of the illiquidity of others. And as we have seen in 2022, losing 5% beats the hell out of losing 20% in other asset classes. So I continue to say that investors, despite the pain, must continue to be liquid. For me personally, Daniela, not for many of your listeners, but for me personally, that liquidity includes gold. I include it because I am willing to sell my gold, use it as liquidity, if a different asset class becomes more attractive to me. Many investors, if they bought gold at 1,800, are unwilling to sell it at 1,650, even if there is a more suitable opportunity on the horizon, because they don't want to quite, quote, take a loss. For me personally, liquidity comes in many forms, principally U.S. dollar liquidity, but also liquidity by way of bullion.
All right, so you guys know that I've shared a lot of videos this year about, well, asset price crash. Due to inflation or CPI, central banks were always going to raise rates, which was going to prick the debt bubble. And assets, I've said this before, assets that were pumped up due to debt, due to leverage, are also going to crash when that debt bubble pops. And she's popping. And so we are bearish. We, especially the stock market and real estate, is going to fall a lot more, in our opinion. Once again, this isn't financial advice. Now, we had clients earlier this year say to us, Steve, our superannuation balances have gone backwards, yet the stock market and everything's gone up. We don't understand. The next question I ask them is, did you change to a conservative portfolio within your super fund? They go, oh, yes, we did. I said, yeah, what you need to do is have a look at the allocation of that that fund. You'll find that it's predominantly bonds and fixed income. And as we know, and as you guys know, I've been talking about bonds being in the biggest bubble in history, going back to 2020. But with CPI, we knew interest rates were going to rise, which meant bond prices were going to crash, and that's what they've done. And we still think the Fed has got some more rate rises to go. However, we're now starting to get up there. And, so a lot of people that went conservative in 2020 actually shot themselves in the foot. So what are we doing? Well, the asset that we've been buying, and I mentioned this in October to our Finance Uncut Insiders group. I said, you want to be checking out I-bonds. Had you purchased I-bonds before the end of October, you could have got a yield of 9.62%. But what are we buying at the moment? Well, we're buying short-term, like 6-month T-bills, getting 4.6%. Now, you're like, Steve, why would you do that? Why would you do that? And just like Rick Rule said, we look at it as an option premium on liquidity so that we can then take advantage of these other asset classes that we see quite big falls from here on out. Now, yes, we also have been buying gold and silver. Our insiders know that we've been buying, well, in particular, silver. But like Rick Rule, and I've shared on other videos I've done, like my Wealth Cycles video, I've sold silver before. And at some point, I'll sell my silver again. And I've got no problem doing that. I'm always looking at purchasing power between asset classes. I look at wealth cycles, and that's how I view different financial markets and how they compete against one another, how they interact with one another. And so, yes, we've been buying silver, but we've been buying more short-term government instruments because we can get a yield on it. So it does, we're still losing on the CPI side of things, but it's increasing our purchasing power against the stock market, against housing market in the next year or two. But we prefer short-term because we just want that flexibility. Look, you could go longer term and try to make a capital gain on the bond. If the Fed or the central bank were to pivot and cut rates, then you'd see a capital appreciation on that bond. But that's not really our main focus. Our main focus is just to park liquidity and have that flexibility. If we can get a bit of a yield to help with that CPI difference there, then great. But what we're looking at is increasing our purchasing power against quality stocks and good real estate. And so, yes, we've been buying bonds, and as I said, we have been buying silver. It's not like we haven't been buying silver, and we did buy silver and gold. But, you know, I've shared on this channel, I've never sold my gold before. I've always just bought gold at different prices. Gold is something that just feels nice to have. Silver, there's times for me to buy it, times for me to sell it, especially when I measure it in other assets. So that's what we're doing. Not financial advice, but what do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, do us a favor and hit that like button. Really do appreciate it. Take care, everyone. I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.